So today we're going to talk about JD Sports because I think JD Sports is currently one of the best UK stocks out there to be buying right now. I think it has the potential to 2x from the current share price in the next 5 years. I actually think it could do more than 2x, and we'll get onto that in a little bit and potentially where I could see JD Sports going. But at the moment, the stock just keeps going lower and lower and lower, and I think this is creating an even better opportunity for buying this stock. And it is one of those nerdy videos. We're going to get really stuck into JD Sports today. Hit the like button if you're new around here, subscribe. Let's get started on today's video. So like I said, we're going to take a look. Before we do, just a quick shout out. If you are on the Patreon, I did just drop my UK stock market portfolio for March 2025. So go check that exclusive video out. If you do want to see the exclusive videos, join the Patreon, links in the description, £5 a month. You also get to see what I'm buying and selling in real time on there, and especially when we're in a bear market like we are currently in right now, with the S&P officially hitting a correction. It's good to surround yourself with some good investors, experienced investors, like-minded investors, and you can do that through the Discord that you get for free when you join the Patreon, and you can talk to me on there. As well as that, if you do want to start investing, join Trading 212 with a link in the description and get a free share worth up to £100. That's personally the investing platform that I use. Let's get on to JD Sports. So JD Sports, obviously a brand that if you're from the UK, you're probably aware what JD Sports is. When we look at the stock chart, right now, you can see the dip that it's currently been on. It had a fantastic run out of the CV dip, and then since then, it's been bouncing around a lot. We had the inflationary period of time with the Liz Truss period of time, where the stock had another 60% dip. Then we had a little bit of a rally out, and then since 2023, the stock has been on a major downturn. And really, the last kind of couple of months, it's been pretty brutal for the stock, and it just continues to go lower and lower and lower. And it's got to that point where it's going that low day after day. This is where I say sometimes we've not seen this for like 2 years now. But if we go back to 2 years when we had the 2022 stock market crash, this is what I said would happen. When we do hit these bear markets, when we have these max fear out there, valuations don't matter. And right now, in my opinion, JD Sports is getting to a point where financials don't matter, valuations don't matter. This stock is now starting to get priced to the levels of bankruptcy, which is crazy to say to something like JD Sports. If we look at the Liz Truss period on like the worst day, this stock is actually now 26% lower than that period of time. If we look at the CV dip, the stock is now lower than the peak fear in the CV dip. The time period where we didn't know what was going to happen in the world, where the world was shutting down, all these high street retailers were shutting down. How long are they going to be shut down for? The stock is now lower than that period of time, which is crazy. And the fact is that when we look at how good of a track record that this has had since that period of time, if we do look at the financials since 2020, you can see here the revenue was 5 billion. It's now gone up to 10 billion. The revenue has doubled in the last 5 years, yet the stock is now lower than that period of time. If we look at the profit was 256 million. The profit is now 342 million, and that's with some acquisition one-off charges in. If it wasn't for those one-off charges, the profit would even be triple than what it is or what it was during that period of time. The stock price to the financials just don't make sense right now, in my opinion. And JD Sports has been taken over by extreme fear. Extreme fear where the valuation has just gone too low for the financials that this business does at the moment. Now, that sounds all quite negative to how good this business is. If we actually just zoom out a little bit, this stock is actually one of the best performing UK stocks on the stock market. If we look here at all time, this stock has returned over 2,200%, even on the current dip it's on right now, which is quite impressive. And it does also pay a 1.3% dividend yield. So it's not going to make you a millionaire, but it is nice to receive a little bit of a dividend. Now, obviously, JD Sports, if you're from the UK, I'm sure you're very much aware of it. They are on a lot of UK high streets. They sell men's, women's, and kids' clothes, as well as shoes. And they sell mostly other brands. So if you were to go on them, like right now, you can see there's like the likes of Adidas, North Face. They tend to sell other brands. Now, what that does, it gives you the availability to sell the most popular brands. So for example, Adidas might go through time periods where it's very popular and then it's less popular. North Face might be more popular and then it drops out. What JD Sports is able to take is the most popular brands at the time and then sell it through their stores. So it's always going to stay probably near the top of the list because it's able to adapt to whichever brands are doing the best as well. Now, if you look at JD Sports, it has expanded past just being a UK business. I think this is where quite a few people get it wrong with JD Sports. They look at JD Sports to just think of the UK high street retailer. That is not true. The company is expanding rapidly. So it started to launch into the US in 2018. Obviously, the US is a major market, bigger than the UK market. And as well as that, when you look at JD Sports, one of the big things, sportswear, also what we have in America coming up is the FIFA World Cup, which could be a major tailwind for the company as well. And then it's also started launching into other places, the likes of Canada, for example, in 2021. But overall, when you look at the history of the business, you will be able to see their big expansion throughout many locations. 2022, we did have a recent CEO change, which we'll actually talk about a little bit later in the video. You can see here that it did start to open its first franchise deal in the Middle East in 2024. So that's something else that is currently expanding into as well. Sorry, in 2023. And in 2024, they did also acquire Hibbett Sports in the US as well. Now, what you're able to see is that it is now a diversified global business. It does not just have UK revenue. The UK revenue is actually the third largest part of the company right now. North America and Europe are actually bigger parts of the business right now. So as you can see here, this is becoming a very global business. Revenue by channel also means it has a good amount of stores that bring in the revenue, but also the online does okay for them. And a good amount of the revenue does come from the footwear, as you can see here. Now, the plan is at the moment for JD Sports is very simple. It's a very simple business to get your head around. It's to open up more stores. That's how they're going to do well. And as we see here, the UK is kind of maxed out. So the target for the UK stores is basically to stay where they're at. All they're going to do is upgrade the stores. If they see a store that's maybe not doing well or they can get a better location for it, then they go get the better location. The rest of it is to expand into the EU. So they currently have 585 stores and they're targeting 850 to 950 stores. The US and Canada, they're looking at 275 stores up to 700 to 800 stores. So that's got a lot of expansions to go. And in the rest of the world, there's currently 92 stores and that has the potential to quadruple over the next few years as well. So there's plenty of stores that they could potentially have in the next few years and they can double the store count, which would be very good for JD Sports. So very easy business model that's had a lot of success. You can see why it's going to do very well. Now, at the moment, you'd think JD Sports isn't doing that well. You look at the share price, you'd be thinking, well, they must be doing something wrong because the share price is absolutely tanked. And yeah, to be fair, there has been some profit warnings with JD Sports. The profit warning was that the profit was going to be 3% lower than what was expected on the low end of the guidance. Now, you're probably thinking, well, yeah, that's not great, but let's be realistic here. Only 3% down on the profit guidance, and yet the stock has done this, or through where we were at 2024, the stock has nearly lost half its value over a 3% profit warning. That doesn't make sense. And that is my ultimate case with JD Sports, is that it's had a bit of a tough time at the moment, but just having a 3% profit warning or 3% downgrade on your profit guidance doesn't deserve to have this drop. And you look at this here, pre-tax profit of 915 to 935 million. Now, if you look at what JD Sports market cap is, it's 3.7 billion. That's insane. The profit before tax ratio to the market cap is absolutely, I've never seen that before, I don't think. Looking at the last year results, the revenue is going to go from 10.5 billion up to 11.4 billion. Now, you'd think that there was something wrong with this business. It's rapidly growing still. This is major amounts of growth. And you could argue the case, well, like we just showed a second ago, they didn't make the acquisition of Hibbett Sports. Yeah, that is true. So you could say that the revenue was maybe not slightly natural, but they're able to make this acquisition because they have so much profit. And even without that acquisition, the organic revenue of the business still grew 3.4%. So the underlying part of the business is actually still doing okay at the moment. So you look at the financials and you'd think that there'd be a lot bigger issue than that going on when you look at some of these financials. And because they're generating so much revenue growth, profit growth, right now the company on a forward PE is currently trading at 5 times forward earnings. 5 times forward earnings. That is incredible. That is incredible to see. 5 times forward earnings. So I think this is maybe where a few people are going wrong, because they see 11 times earnings and go, yeah, okay, it might be cheap, but it's not that cheap. But actually, because they've got the one-time charge going on in the current numbers, and when this updates, which will be in, I think, this month, and it starts showing up as a 5 PE, that's going to be absolutely crazy for the business. And then what you also start doing is you look at what historically it's normally being valued at. On an average, this company is being valued at 23 PE ratio. So this is over 75% lower than where this company normally trades at. And you could argue the case that maybe it'll never go back to 23 times earnings again. And I'd say maybe, but it's certainly not going to be 5 times earnings. I mean, realistically, it's going to be what? 12, 13, 14, 15. I could argue the case for 18. It's going to be a lot higher than where it is right now. And right now, JD Sports, yeah, it's having a little bit maybe of a tough time at the moment. But you look at some of the competition. Look at Nike. Nike are in an absolute mess at the moment with negative 7.8% year-over-year growth. And if Nike starts coming back, that's only going to be a bonus for someone like a JD Sports. You look at someone like a Foot Locker. Foot Locker's very similar business, and that's down negative 5.5% year-over-year revenue. On a forward PE, Foot Locker is 10 times earnings. It's double the valuation of JD Sports, and it's a million miles better business. How is JD Sports valued half the valuation of Foot Locker? Look at someone like a Dick's Sporting Goods, for example. Basically flat revenue growth. This is 13 forward times earnings. We're talking nearly triple the valuation of JD Sports, and yet the financials are nowhere near as good. It just doesn't make sense how it is so low. And the thing is, you look at someone like a JD Sports, the track record has been absolutely amazing. You look at the balance sheet, it's got a cracking balance sheet. You look at the balance sheet, you can see this little spike up on debt. On the latest report, they actually said that they've paid most of this debt off, so the debt has actually gone back down again. They've got a nice, healthy cash balance. They make a lot of profit. Obviously, there's a one-time charge. When the one-time charge goes out, they're going to go back up to 640, 700 million in profit, which is crazy for a 3.8 billion market cap that's growing at the rates that they're currently growing at as well. You look at the insider front as well. You got insider buying. When the stock falls this much, what is one of the bullish signs that you could see? You see the insider buying going on, and that's the case. You got the chairman of the board coming in and buying some shares, and the CEO actually bought some shares not too long ago, but that's not even showing up on here, by the way. So just be aware of that one as well. There's so much to like. I can't understand why this stock has been thrown under the bus so much for what seems like a 3% profit warning. It just seems so low valued, especially compared to the competition. I'm using the competition like Foot Locker and Dick's Sporting Goods, and you might say, well, it's a UK stock. Well, technically, it's not a UK stock, because when you look at the revenue mix now, the UK is only 30% of the business. So it's not really a UK stock. So I compare it to the valuations of someone like a Foot Locker, for example, or someone like a Dick's Sporting Goods, for example. And I'd actually say JD deserves to trade at more of a premium than them, because JD is a better company than them. If I was to compare to Foot Locker, for example, look at Foot Locker. The revenue has been declining for many years on Foot Locker. You look at the revenue and it's been dropping since COVID, really. Maybe that's JD Sports taking market share. The profit margins have been dropping. It's actually been starting to lose money. You look at the balance sheet. The balance sheet isn't as good. They've got a little bit more debt on there. The cash pile is a lot thinner than where JD Sports is, and obviously not generating as much profit. So I would say that JD Sports should trade at more of a premium than them. So I guess, why is it potentially going so low? Is there any negatives with this company? And there is. Obviously, there's the NI changes going on in the UK. That will impact them. But like we said, they're not really a pure UK company anymore now. So I wouldn't take it as a major issue. Obviously, that will have some impact with them going forward. So it's something to be aware of. I don't think it probably deserves to go on the drop that it has been going on right now. So just to be aware of that one. Some people say it doesn't have a moat. Obviously they just kind of retail other companies' products, and that's kind of true. But last time Nike tried to move away from some of these wholesale partners like Foot Locker, JD Sports, it really hurt them. And the fact is then the new CEO came in, and the new CEO came in and said, all our partners feel like we turned our back on them. We've had to go apologise to them. So Nike have actually realised the wholesale part of the business is a major part for them. They need players like JD Sports. So I kind of discount that one, because last time we saw a company try and move away from someone like JD Sports, it really hurt them. The next one is maybe the new CEO change. I think we just said previously that there has been a CEO change in 2022. That's something to maybe be careful of, is that, a new CEO can sometimes disrupt the business. So far, he seems to be doing an okay job, apart from a little bit of a profit warning. But that's probably something just to kind of watch here. And the other thing would be a recession. But you can always have a recession. You don't know when a recession is going to come. A recession comes, it could affect all businesses. But at the end of the day, how long is a recession going to last for? 1 year, 2 years? I'm a long-term investor here. I'm looking at JD Sports in the next 4 or 5 years, and I think that that's the benefits of being a long-term investor, is that you go through a recession. You could maybe argue the case the stock is dropping right now because it is priced in a recession, but in the long term, we aren't going to be in a recessionary environment, and that's something that is the benefit of being a long-term investor. You don't have to worry about that, and you can go buy shares at the cheaper prices. Now, let's have a look at some numbers. So I've done some numbers here of 3, 5, 7% revenue growth, which is a lot lower than they've historically grown previously. Profit margin of 4, 5, 6%. Same again, that's about where they've previously been as well. So nothing too crazy there. And I put a 15 times multiple of earnings in. That's what I think is about a fair valuation, especially compared to what some of the competition trades are. And looking at the low side, even on the low side, and that would, at 4%, that would assume some decreasing in the profit margin. 3% revenue growth would be way below what they've historically done. And if we look at that on a 15 times earnings multiple, there's 100% upside. On the mid side, I think they could probably hit these numbers. You can nearly get 180% upside. And on the high side, you got 7% revenue growth, 6% profit margins, 15 times earnings, 263% upside. And I think this is achievable. I would actually say that potentially, if JD Sports can, they might even be able to get up to a 7% profit margin, which is even better for the business. I mean, look at the difference that they'd be able to do there. Another really bullish case is that, like I said, I think 15 times is a really fair multiple for a company like this. I mean, if they were able to get closer to where they've historically traded, which is 23 times earnings, I'm not even going to go 23 times earnings, I'm going to go 20 times earnings. Look at the upside there. Yeah, I mean, This is when I really like a stock. I really like a stock when I'm putting in numbers in. Like, I'd be very disappointed if they did those numbers, and yet I'm seeing still upside from the current position that they're in. And like I said, with JD Sports, it just, I don't understand why the stock's gone low, so low. Like, it is pricing in. To me right now, JD Sports is starting to get priced to bankruptcy level. When you get a company at 5 times forward earnings, it's just, for me, that is bankruptcy level. You should not be having a company of this quality. Like, we're not normally at 5 times forward earnings, you'd be talking about a company that would be either revenue growth is declining, which we don't have, it's still growing. You'd either be talking about a company that is majorly thin on profit, which we don't have. This company has, good amounts of profit. We'd be talking about a balance sheet that would maybe be in an awful position. We don't have a balance sheet that's in an awful position. We have actually a very good balance sheet. It doesn't make sense. It just doesn't make sense. And I've kind of already gone fully allocated on JD Sports. And now I'm at the point now where I didn't think it would go this low. It's one of those where you say, surely it can't go any lower. And with the case of JD Sports, that has happened. And that's why maybe you should never say that saying. I think on the Discord we say, never say that. But we do, so we still do it sometimes because, I never thought to get to 5 forward times earnings. But I'm at the point now with JD Sports, like I'm pretty fully allocated to it. But I'm at the point now where it's one of those where do I break the rules? Because if this is, when we look to the risk to reward, you know what, if I get it wrong, it's going to be, an absolute stinker for me. But it just comes to the point of view where I look at the risk to reward and the risk that I'm seeing isn't a huge risk. I mean, there's still risks, of course. There's risks with any sort of investment. But when I look at the reward, even like a really worst case scenario on this, I still make good money on it. So I'm at the point now where I was like, is it one of those where you go break the rules? And I have broke the rules before. And, that's where it gets a little bit risky because you are taking on that little bit of risk. But with that risk, if you do get it right, sometimes it does come the reward. And that's where those kind of big decisions have to come from. I remember back in the last 2022 stock market crash, I remember taking the risk and over allocating to like HIMS and DraftKings. And I got the rewards. It turned out really well for me. Same with JD Sports. I'm looking and thinking, is this the point now where the, I do go over the allocation a little bit, nothing crazy. I'm not going to put JD Sports as half of the stock market portfolio, but, does it go into, 15% of the UK portfolio, 20% of the UK portfolio? That's the kind of case that is to be made now. And I think this is a good stock, a very good, a very interesting opportunity. And I won't understand why anyone is not at least having a consideration on it, I would say. So yeah, thanks for watching. Bit of a long one. Hope you enjoyed it. Bit of a nerdy one. But yeah, thanks for watching, guys, and see you in a bit.